You'll never be caught needing to replenish your stash again when you subscribe to Hemper's monthly smoking boxes. Hemper's hands down the best place to stock up on your smoking supplies no matter the occasion. Curated with innovative and hand-selected products to ensure you're getting the absolute highest quality accessories for your smoking experience, Hemper's monthly smoking subscription service provides $100 plus in value for only $40. There's also the convenient options to receive every month, quarterly, semi-annually, or annually. And right now, use promo code HEDGE10 to get started and receive 10% off Hemper's box or the XL box at Hemper.com. Lifted Drinks. Join the party, skip the hangover. Created by hemp and cannabis lovers, Lifted is an amazing, tasty, non-alcoholic beverage created to improve any evening in or weekend out. Lifted is 100% hemp cannabis, 100% consistent, 100% of the time. We could ship anywhere in the U.S. Just add ice or mix it with your favorite beverage. Check them out at lifteddrinks.com. That's LYFTED drinks.com. Enter in radio to get a 20% discount at checkout. You must be 21 or over to join the party and skip the hangover.
It's only entertainment.
Welcome back to The Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your Cannabis Business Podcast. Today, we have got Mark Sims, CEO, RIV Capital. Mark, thanks for being with us at The Talking Hedge.
Absolutely. Pleasure to be here.
RIV Capital, for those who haven't seen the news lately, you guys are the investing arm to Scott's, like Scott's Miracle Gro. Is that an accurate description, or how would you describe it?
Yeah, no, the best way to think about it is, Scott's obviously back in 2015, they started buying up some cannabis input supply brands. So General Hydroponics, et cetera, they made a series of acquisitions, been highly supportive of the cannabis industry, but more as an input supply house. A couple of years ago, and that's where I hail from. I was over at Scott's, but we started looking at kind of where are there opportunities within the cannabis value chain, and obviously Scott's on the consumer side, lawn and garden, knowing the power of brands. They said really kind of the folks that own the brands in the cannabis space are the ones that are going to kind of the most revenue and margin is going to accrue to them over time. And so they went about looking at, is there a way that they could get, exposure into the leaf touching space? So technically Scott's provided a $150 million convertible loan. That was the initial investment that would allow them to convert, I believe, up to 42% was the initial loan that they gave them. So they are a key stakeholder. They are not a shareholder. They do have 3 board seats on the RIV board, but they are not involved on a day-to-day basis operationally. And all the capital, which again may be interested to the listeners, all the capital that they supplied was restricted cash. And so it couldn't be used for either OpEx or CapEx in a plant touching business. The great thing about the Etain acquisition that we just completed or are in the process of completing, we completed the first close, just due to the nature of that restricted cash, that is able to pay equity holders directly. So all the capital that Scott's had provided that was quote unquote restricted was able to be used to pay the principals in the Etain deal. So it actually worked out well. So then all the other cash that RIV has on the balance sheet that is unrestricted, we can use to fund OpEx, CapEx, and potentially further deals.
And I definitely want to talk to you about that Etain deal in New York, $250 million for, I think, 4 locations, huge market. I want to talk to you about the implications and impacts of that. But before we do, I am curious about the initiation of Scott's. I would have loved to be a fly on the wall and heard that conversation and how that conversation evolved. Would you say that it was more about the revenue opportunities or the product that they had and the opportunities to sell? And I know that sounds like one and of the same, but Etain has nothing to do with Scott's products. That is a revenue play, whereas Scott's products have a chance to get into the market, especially with Homegrown, which I want to follow up on. So again, do you think that this introduction of Scott's coming into the cannabis space is more about the revenue opportunities or about getting their products into the cannabis industry?
I think it's more about the long-term revenue opportunity. That would be my take. And I think, on analyst calls and such, Jim Hagedorn, the CEO at Scott's, has kind of said the same thing. Again, I think they really have been successful with, I'll call it the picks and shovels play, right? Which is the Hawthorne gardening segment. They did $1.3 billion last year. I think they'll be south of that this year, obviously due to the challenges in the cannabis industry and some of the oversupply issues. But really, again, they've created a nice business there in the input supplies. I think it was really, as we did the analysis and looked at the overall value chain, and when you look at the value chain of most crop-based industries, the people that kind of own and sell the genetics, they make a lot of margin. They make a high margin rate. Maybe there's not as many dollars, but if you look at the kind of the branded side of the house, so the people that own and manufacture the brands, and then the retailers make the most margin dollars. And then typically the input supply providers, the farmers, and the processors are the ones that kind of have the lowest margin and the lowest dollars that can accrue to them within the space. So I think it was really kind of that longer term exposure that Scott's was looking for with respect to the industry overall. And I would also say, and again, their actions have kind of highlighted their support for the industry in general. So obviously, as an input supplier, obviously you want to see more people grow, and you want to help as many people to do that as well as possible. And obviously you want them to use your products, but they've also done a lot of things to just in general support the industry at the state level, so state ballot initiatives, but also at the federal level, where they've lobbied, quite substantially to try to get, safe banking passed, because they know that would be super helpful to the industry. It's not necessarily going to free JP Morgan up that they're going to jump in, but a lot of these regional banks will kind of start to participate, and that'll be super helpful for the industry, the growers, the even the hydroponic retailers, the cultivators, the dispensary owners, all those folks. So I think, that's where they just have really shown a commitment to the industry overall. But, their investment in RIV is really kind of that long-term, growth play as it relates to, the industry overall.
There seems to be a huge opportunity with Homegrown. Do you know if there's lobbying to allow for homegrown in states like Washington, where it's currently a felony? There was a lot of these warehouses, these picks and shovels, you go buy your dirt in hydroponic stores. And then once recreation came on board in Washington State 10 years ago, those warehouses were gone. They either left downtown for cheaper locations, or they just went online, or they just went away entirely. Seems to me like an opportunity to sell a lot of products to Homegrown. Are there lobbying efforts in order to push that? Do you know?
Yeah, I mean, typically, and again, I don't know the specifics in Washington, but typically when, and I think, as an industry overall, we should be supportive of Homegrown, but typically, whenever kind of ballot initiatives were coming forth, Scott's was always pushing for the homegrown element. Obviously, the historic part of the business, right? Scott's and Miracle Gro, it was all about helping the consumer, have a great garden, have a great lawn, whatever it is. So it was all about that kind of consumer focus. And in the pandemic, they really saw that a lot of folks, either from a food security or a food safety perspective, there were like 19 million gardeners that came into the category. And so I think that the same can be true for the home grow space of having people participate and understand, not only like how enjoyable it is to kind of grow the plant, but also how hard it can be, so that when it's done well, they can really appreciate, kind of like home brew versus, getting a great craft brew. Kind of, you can appreciate kind of how hard and challenging it can be to do it. even on a small scale, let alone on a large scale.
That's why I think it's a money grab, because most of these people are going to go out, they're going to buy the equipment, and then they're just going to try to sell it on the secondary market because they realize like, oh, I'm not going to make, cigarettes. I'm not going to make my own alcohol. Some people do like going and making craft brew or wine. I've done both. But I don't grow my, anything, whatever. I don't even grow cannabis anymore because the wholesale prices are too low. As soon as it hit $3 on the wholesale level, I stopped growing. So at some point, I would imagine it's a money grab, but people aren't really going to follow through because it's not easy. It's not weed. It doesn't grow like weed. It's right. Actually very, very challenging. So I would imagine there's a lot of push where you're at to get your first mover advantages. That $150 million doesn't go very far. You spent $250 million on that Etain deal in New York in and of itself. I would imagine you have more information than I do. That tells me, that deal alone tells me you guys aren't anticipating federal legalization to happen anytime soon. If you're going to spend that kind of money, $250-something million on one location, one state, I think 4 locations, a lot of money. And so would you agree with me that you guys aren't anticipating federal legalization to happen in the near term?
Yeah. So I know I've told this story to a couple of folks, and I think it was Chris Hagedorn at Hawthorne. He had purchased some old High Times magazines for just to like read for fun. And there was one from the mid 70s, and it says federal legalization right around the corner. So a lot of folks have been made to look silly by trying to predict when the federal government's going to act. But I feel pretty confident to say, we're kind of 3 to 5 years out from any kind of meaningful federal legalization. I mean, that can mean a lot of things. Permissibility in terms of the safe banking, I think that has a good shot of making it through Congress this year. Maybe it doesn't survive the Competes Act, but I think people I've talked to think it could potentially, after the election, get passed through and kind of lame duck Congress, which would be great. So I think maybe kind of these baby steps, and that's probably the best way to go about it anyway. The other thing too, I would say is, when you think about federal legalization, what does that mean? The way we've analyzed it, at least when I was at Scott's, and even having discussions since then, the Congress passes an act that says this happens. Well, that doesn't mean that there's not a tremendous amount of work, i.e. a lot of time that's going to be needed to put in a regulatory framework that then actually gets, gets all the public comment, gets all the, gets refined and corrected. And so the way I think we think about it is there's going to be more of a glide path approach, where even if they kind of say, yes, it's descheduled and federal, even interstate commerce is allowed, I think kind of the glide path that they'll give for states to enact that, maybe similar to the 2018 hemp bill or farm bill, where they said, hey, you just have to, yes, you can do interstate commerce, but you got to do it within the confines of your state license, et cetera. I think that will be the reality. And how long is that glide path? Is it 5 years? Is it 10 years before you kind of really start to see, everything roll back to California or Iowa, whatever kind of analogy somebody wants to use for a crop-based industry, or Colombia, right? You hear people talk about all this is just going to be imported in 55-gallon drums. I think the glide path on that is pretty long. And I think part of what we see as the opportunity in New York is to really build a brand. If you think about the 2 cultural epicenters in the U.S. that drive a lot of trends, it's really kind of California and New York. And so being able to establish kind of a solid business and brands in New York, influences the Northeast as well as, can start to influence the rest of the country.
From your experience, just looking at sales or any data that you can pull from between California and New York, there's this East Coast, West Coast rivalry in the cannabis space right now, where New Yorkers think that they're going to be the dominant, money-centric location for all of the cannabis expansion, whereas California argues they're the culture, they're the epicenter, they are what drives the demand. Fifth largest GDP in the world is hard to argue against too. Do you foresee a market in New York that outweighs that of California?
I'd have to check on a per, so I think that the one interesting thing in California and kind of looking at those West Coast brands that are popular is a big key to our strategy. So yes, we kind of acquired New York, but really kind of the second part is we really want to take some of these West Coast brands that we think have shown the ability to have success in the most competitive market in the world. So most sophisticated consumer, most competition, both on the licensed and unlicensed side. And so folks that have been able to prosper there, you're like, okay, that's a pretty good microcosm of what a real market would look like. And then you bring them to New York, where you basically have, kind of limited license state with, a lot of the businesses still to be built there. We think that's a winning combination. I think if you look at the data, I believe, I don't know the population. I believe California has a larger population. Obviously, if you count tri-state area, probably not. But the incidence, I believe, the incidence of usage is higher in California than it is in New York currently. So I think, on a per capita consumption basis, in the short, in the next 3 years, it's probably still California will reign. But I think in terms of the growth and the ability and seeing kind of this nascent $500 million medical market in New York grow into the $3 to $6 billion, whatever number you want to believe, adult use market in New York, I think you'd be hard pressed to find a more exciting market than New York. Also with kind of hopefully, all the, travel picking up again. I want to say in 2019, like 160 million people visited New York, not only from the US, but all around the world. So again, I think for, if you're brand building, having a presence in New York is going to be pretty important. And then you brought up kind of the money side. I think that's another reason. Like if you have a solid brand that's somewhere in Manhattan, you have a solid brand in dispensaries, Brooklyn, New York, or Brooklyn, the Bronx, wherever. That's where a lot of these Wall Street guys and gals work. And so if they're seeing that brand, they see how kind of popular it is. I think that can also start to influence as big banks do move into this. Is that can also start to influence, like, who do they think are the right brands that they want to back? So again, ours is maybe a merging of your East Coast, West Coast question, where you take kind of the authenticity as well as the success and the ability to grow at scale, right? We talked about how challenging that can be. A lot of these folks have shown an ability to grow at scale. And then you marry that up with the money men and women in New York, and I think that can be pretty powerful.
Where is the investment being driven right now? If we look back in the rearview mirror, we could see 2019 predominantly driven by MSOs and activity. And then fast forward, we've got the pandemic, we've got a lot of issues right now. Cannabis companies and every other stock is not doing very well. Real estate is you're starting to see some not collapse, but maybe overturning in Toronto and New York. People are deciding to move out rather than paying higher rents. There's and that's inflation, right? Inflationary pressures are putting a lot in the market right now. And so there's a lot of uncertainty, and I'm wondering where that pivot in order to stay relevant is going to, from the drive for MSOs. And then we saw a lot of producers and processors being acquired. Where is the investment focus now?
Yeah, I mean, I think kind of what I've seen is, we've seen a lot of, I've had a lot of calls. I've been in the role a couple months, a lot of calls of players that are saying, hey, it's going to get stormy, or it already is pretty stormy out there. Do you want to build a bigger armada? Right. And so I think that's kind of the thing that could consume a lot of your time, trying to assess, like, is this would it be interesting to marry these things up and kind of bring these parts together? So I think a lot of folks are trying to, I think, people are trying to build and kind of grow their business organically. but they're also taking a look at saying, how do I potentially find partners that, can help me either, accelerate my strategy and, or just, kind of give me a bigger armada, like I said, to weather the storm, until some macro event, which I think is really what's going to drive the whole sector higher. Is if safe banking could pass, I think that could be a good catalyst for potentially more capital coming in, but also a trend that Congress can actually do something to help the industry. And then maybe, as we said, over time, they can kind of chip away at the other aspects of the large, Booker Schumer deal that's out there. That's probably just too big to digest for, a 50-50 Congress at this point.
Mm-hmm. But talk to me about your current state. Did you guys do a D-SPAC? Are you guys public?
Yeah. So RIV Capital previous was Canopy Rivers. And Canopy Rivers was the venture capital arm of Canopy Growth Corporation. So they had, as a venture capital arm, they had some investments in plant touching businesses in Canada. And actually, we still have some of those in our portfolio, as well as they invested in some ancillary cannabis companies. But about a year and a half ago, the RIV team said, hey, we really think the growth and the opportunity is in the US plant touching side. So they went through a process to really kind of detangle or kind of figure out how to cut themselves off from Canopy Growth so that they could truly be kind of standalone. And in the process, we're able to kind of improve the balance sheet, or put about $200 million, I think, Canadian on the balance sheet. And then when they were able to pair that with the $150 million from Scott's, they went out hunting.
Mm-hmm. Okay. Interesting. And so the US is predominantly where you guys are focused at. There's a lot of over speculation in Canada, and with Aurora and Canopy, the amount of greenhouses they basically had to just get rid of because of excessive optimism, I guess, has led to individuals pulling money out. Simply put, they're going to try to put it into maybe crypto or something that has a higher return. It used to be that you'd go to an IPO and that was your form of speculation. And now it's penny stocks and crypto, and everything else is going crazy. I like asking the question, in terms of publicly traded companies, what's the biggest impact to your bottom line? Is it going to be banking, like you mentioned earlier? Is it going to be 280E to immediately have your margins look a lot better in your profitability? Is it going to be interstate commerce? What is going to be the biggest impact in terms of like what your hindrance is from the federal government standpoint? Yeah. If one thing changes, what is the biggest impact?
Yeah. So I think, for us in the short term, we need to execute our plan, and that'll help our bottom line because we got to grow the business. But I think as an industry and as a whole, and kind of RIV as a member of that, I think the 280E piece in my mind is so punitive in the way that it impacts cash flow, right? So obviously everybody reports kind of EBITDA numbers, which are fantastic, but then when you actually look to see, okay, how much are they actually putting in their pocket? And it's really, really punitive. I was glad to see it. I don't know if it's going to start immediately, but New York, a lot of these states also follow kind of the 280E model, despite the fact that, people are operating legally within their state. New York has talked about kind of not doing that and allowing you to deduct kind of normal business expenses. But I think that would be a huge, huge help to the industry in terms of just being able to have additional cash flow that you can, churn back into the business, that you're not always constantly having to go out and try to raise capital, that you can actually just reinvest back into your business.
Mm-hmm. Are you going to be investing in anything outside of the producer or processor or retailer? I know the cannabis companies have been hammered. One of the apps that we have, Toro Alerts, got 147% trading cannabis stocks last year. using artificial intelligence and machine learning. There's a lot of AI and ML in the industry. There's a lot of data like Headset. There's a lot of opportunities to utilize that data. Is that something that you guys are looking at for acquisition opportunities, or is it simply the producer, processor, retailer?
Yeah, interestingly, we're kind of going from this. So the RIV Capital side, so the legacy RIV Capital portfolio, I think we have 11 companies. Headset is actually one of them. So RIV Capital was an investor in Headset. LeafLink, although it's the international LeafLink. So they had a lot of these kind of ancillary cannabis investments. Really, the intent now is to continue to manage that portfolio, but really the focus is going to be on kind of cultivation, processing, and retail. And really brand building is kind of the main key of all that.
Okay. If investors want to find out a little bit more about RIV Capital, what's the ticker symbol or website? How can people get more information about you and RIV Capital?
Yeah, so it's rivcapital.com is the website, and has, I think there's a link there where you can click on it and it'll send a message to our investor relations team, and we can absolutely touch base and tell you more about what we're doing in New York and beyond.
Okay. Yeah. And we'll put a link to RIV Capital, and then Mark's link to from LinkedIn, so you guys can bug him as well.
Absolutely.
With that, I think we're going to have to roll this one up. So I want to thank my guest, Mark Sims. He is the CEO of RIV Capital. Mark, thanks again for being with us at The Talking Hedge.
Thanks, Josh. This was a lot of fun.
Appreciate it. I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out. With that, we're going to roll this one up. I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.
Hi, my name's Kate, and I'm your host of the Pop Moms Podcast. I started the Pop Moms Podcast, because I wanted to end the stigma against using cannabis, specifically with moms, but also anyone who chooses to consume. I strive for a balance of humor and education, along with some pretty rad guests, to help combat social biases that come with consuming cannabis. Kids are hard. Join me for regular podcast episodes packed with parenting hacks, real-life stories, and of course, my favorite cannabis products. The days are long, but the years are short. So roll another J and take a deep breath. Keep blazing and stay amazing.